Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Sunday, February 8, 2015. This is a quick update for the week going forward. We'll review a little bit from Friday's action, and then we'll try and set ourselves up for a positive week going into the week of the 9th, which is tomorrow. So you're looking at a daily chart of the SPY, and in the morning on Friday, we went higher, and if you remember here, I was looking at my next target at this pivot high, which was 206.88. And I said if we got there, we would probably get to the round number of 207, maybe 207, 207 and a quarter. What was the high today? 207.24, and then we reversed lower and we finished a little bit lower on the day. Now, it's interesting, I do have a daily cycle top scheduled for Monday, another one of those famous daily cycle tops, and it's easy for me to say because I'm actually doing this video after the futures opened and they're already down 7 points, so it's kind of a, it's not fair to you guys, but nevertheless, I did have a cycle top for Monday, and that doesn't mean that it's going to be, pull the rug out from underneath the market. It's just one of those daily cycle tops that could be, one of those 2 to 4 day moves, just like we saw here. Daily cycle bottom, it was about a 4 day move, 1, 2, 3, 4, and then we reversed today. So it was about a 4.5 day move, something like that. That's normal. Okay, so where are we going to go? Well, our first area we'll probably find some level of support is going to be on this trend line right here. So when the market opens tomorrow, you're going to come down and you're probably going to find a fair level of support. I'm going to say at about the 204.5 area. Okay. Now keep in mind, if we go into this channel again between these two trend lines, okay, the probabilities begin to increase that we'll get to the bottom. Now, if we get to the bottom, which would be somewhere down here in the 199, 199.50, 25 area, okay, depending on what day we got there, all right, if we got down to this line, all right, the probabilities begin to increase that this line won't be support any longer, and we'll have to come down and test this gap area down here at 191.5, 192, 191, in that neighborhood, okay? Right in this gap area here, but we're not worried about that yet. So first area of business would be this trend line support that should act as a fair level of support, at least intraday at a minimum, right? And then if we came into this trend line, we have to see how the market reacts. If there's selling on heavy volume, you can anticipate heading down towards this lower trend line. And then when we get down there, if we get down there, we'll have to make an assessment and we'll see what the market's doing at the time, and we'll see what kind of velocity we get on the downside if we get there, whether or not we're going to bust through and go here. But we'd have to see a close below this trend line to get down to this area. So it's one step at a time, one day at a time, but that's basically the week looking forward in the SPY. All right, let's move forward to gold. Let's see, the GLD, all right, we had a nice little sell-off in the GLD today. That's not GLD, GLD. Okay, talking and typing. All right, we had a nice little sell-off in the GLD. Remember, I said we would come down to this area here, right? We did that. We bounced off of it. We came down again. Then we broke through and we filled the gap, but we went a lot lower. We headed towards this 50-period moving average. So maybe that was a little unexpected on my part, but nevertheless, I thought we would find some level of support here, but we didn't. So we'll probably have more downside ahead in the GLD. But make no mistake about it, okay, this is not anything to be concerned with. This is normal reaction off the 1300 to 1310 area, which is what this high was, about 125.5. Okay, on the GLD. The 1300, 1310 was the area that we hit, if you remember, a couple of weeks ago in the gold futures contract. And this is normal reaction off that top. We'll probably scare the last people in out. Once we scare the last people in out, we'll start up again, and we'll probably find a bottom pretty soon in here. There could be another $10 or $20 on the downside in the price of gold futures. We're trading at $12.35 right now, so there could be a little more downside, but probably not too much, and time is probably running out for another move to the upside anyway. So that's where we stand. I don't have a definitive time cycle for a bottom in on a daily basis in gold, so we'll just take it one day at a time, and we'll have to see what the daily patterns give us, and if we can hop on the long side, we certainly will do so. Let's go to the USO. We'll talk about crude oil a little bit, and crude oil is still headed a little bit higher, but I did a couple of days ago have a daily cycle top, okay, over here, but we're still continuing a little higher, so I wouldn't rule out some more downside this week in the price of crude. And by the way, if the stock market cycle top plays out into Monday and Tuesday, maybe even Wednesday, if the market goes down, you might expect downward prices in the price of crude oil. We'll have to see how that plays out. But I do have a daily cycle top in crude, should be in play, so we shouldn't really take out this high here in the USO that was 2029. If we do, then that's wrong and something else is going on. That obviously happens. Nothing is 100%, but I'm just I'm giving you the probabilities of what my work is giving me, and the probabilities, they work out most of the time, but not all the time. So that's just something to be aware of. What else do we have going on this week? Well, with some downward pressure in the market, you may see some stocks start to retreat. We had some upward momentum in the energy stocks, and if the price of oil stays up, the energy stocks will stay up. But if oil retreats a little bit, you can expect the price of the oil and energy related stocks to come in also. Like, for example, things such as the XLE. The XLE is comprised of a lot of the big integrated oils. And right here you can see that we're into some resistance here. We may be able to get up to this area at about 82 and a half. But I don't think we can get through there unless we do it on heavy volume. But right now, we're probably going to start hitting a slowdown in the price of some of the big integrated oils on the upswing. So you would look for a pause, and we'll see how they react off these levels here, whether or not we're going to go higher or not. We're still in the overall big scheme of things in the stock market. We're still inside this weekly cycle bottom, so I'm not sure we're going to get a lot of velocity on the downside. But if we do, we'll talk about it each and every night, and we'll just adjust accordingly, right? We don't care whether the market is bullish or bearish. We just care that we're on the correct side of whatever's going on, right? If we're long stocks and we want to hold some stocks, maybe we write some calls when the market gives one of these daily top signals. Maybe we buy some protective puts. Maybe we sell the stock. Maybe we don't. It's all up to the individual investor. It's up to the individual trader. That's up to you guys. I'm just trying to give you the benefit of what my analysis is telling me, and then the probabilities are the probabilities, and then we just go with it one day at a time. And I think that's going to wrap it for tonight. We'll see you again on Monday evening. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.